Hello everybody, welcome back. Let's have a brief look at what's gone on with Bitcoin. Everything's falling to pieces, the world's coming to an end. I thought Max Kaiser said that it's not done, but yeah, look, let's face facts, alright? Whatever he says and what anyone says is kind of irrelevant. The chart says everything we need to know. And to be honest, we've always said, yeah, for at least the last few weeks, that we're going to be in this range, whether it's a reaccumulation or just a pit stop for the next leg down. Either way, we're getting rejected more or less from this 10 exponential moving average, which is obviously not a good sign. Obviously, there's no real strength there. And now we've come down to test that hallmark, that 33,000 zone. And we're talking weeklies here, so this is a weekly chart. I'd like to see the weeklies close above here. That would mean, in my opinion, that the recovery would be faster than us going deeper and into essentially a bear market, really. And when I'm talking about a bear market, I am talking one similar to the one in 2019, which isn't an actual bear market. It's a long drawn out period of consolidation after an unreasonable early parabolic high. So not when people say bear market, I think especially a lot of new people will automatically look at how a bear market has behaved in the past for Bitcoin, which is a year or more of continuous downtrend to the tune of about 80 on maybe even 90%. I don't think that's going to happen. But if we do close candle bodies below here and start getting rejected here on the weekly on that green 50 exponential, then maybe we could entertain the idea of a more longer period of downtrend rather than a sideways price action. But never mind. What we also can entertain is that this is the medium zone, this 33,000. So we can go have wicks below here. We can even, I suppose, maybe even have closures below here, and we can meander above and below it. And having our main accumulation range from this 50 moving average, this purple one here, so the 50 moving average, and I guess this top side here, which is about 38, 39. Which corresponds to these tops over here before we, I suppose, made that final leg up to form the top there. So, in my opinion, it is kind of doing what I expected it to do, which is, I suppose, meander around several kind of zones, all, I suppose, being around the $33,000 zone. And if we have a think about, how this has behaved in the past, to that 50 exponential moving average, we did break down below it in 2019 after this parabolic run. We had a nasty breakdown here, big nice bounce from it like you would normally expect, and then we finally did take a big low down from it and rejected essentially below it for over a month before we came back up, and then March decided to take it out completely. It is a big deal being below here, because it does carry an enormous amount of uncertainty for the bulls. Being above there is like the last stand for any kind of reasonable reversal period. But for the moment we are above there, and having wicks below there is no big deal. For me, it's about the candle bodies. Either way, personally, I'm not really seeing a way out of this to go to a new all-time high anytime soon. But that's never really the point of being in crypto. Is never to think about, I'm going to chase that new all-time high. I am going to make my money. I am going to the best thing you should think about is that with every next leg down, and I mean a significant leg down, it's a dollar cost average event, really. It's just a time to buy a little bit more in these specific zones. And we've had these zones marked out on the daily, to which most of them have been wrecked. They've all been wrecked, to be honest. So each one of these was a buy zone. We're talking 48,000, some allocated cash went into it there. 200 exponential, 41,000, 42,000, some allocated cash went into it there. And then we had a variety of ranges towards the low area of 33,000. And they've all been filled, obviously, way back, from these back here. The last one I've got on my list of any reasonable significance, it would be 28,000, so 29,000. That would be also another buy zone, which I do expect to get filled, to be honest. I do expect that to get filled. And if this breaks down from here, then it is bear market territory. And for me, at that point, rather than trying to catch knives, I would actually save the remaining amount of my potential investment money to an actual confirmed consolidation ending into an accumulation, which we'll get signals for that type of thing. At the moment, these are all particularly interesting knife catching events, which have all basically ended up slicing my fingers off. But again, I'm very, the reason I'm so relaxed about all crypto is because I've never gone about harvesting kidneys to put into this. It's all money that I've been trading with for a very long period of time, so it's not, and also I do know where it's going. In my opinion, I have a very clear idea of where this is going to go, even in the short term. And when I'm talking about short term, I'm talking about 6 to 12 months. I trade all the time. Do you know what I mean? I trade all the time in a variety of different ways. I wouldn't trade an asset like this, especially catching knives on the way down, from something that's been at a high, which I, a couple of years ago would almost disbelieve if somebody told me. If they said to me a year ago, they said, you're going to buy Bitcoin at 50,000, I'd be like, you've got to be joking. Absolutely, you've got to be joking, right? I'll be selling it at 50,000, I won't be buying it. But, things change. Absolutely, everything changes. So things do change. And yeah, I did buy some at 50,000. I bought some all the way down here. The overall picture is that this is a downtrend which is likely to continue. Whether it continues deeper into a bear market or whether it just takes another stab down into the upper 20,000s, which I think is most likely. You got to remember that a lot of this uptrend was forged in the unbelievable Black Swan event, which gave us a lot of opportunity down here, and then the price of the dollar getting wrecked. And obviously that helped this uptrend begin and be so sustained. Then the institutional money came in, and then the retailers caught wind of that. Everybody put their trust in Elon Musk's judgment and basically bought around here. This is the Elon Musk bullwhip. So he announced his Bitcoin purchase, or Tesla's, around here, and then this was it. This was it. And judging by the way that we would look at this normally on any weekly chart, is that that's your parabolic top, that's your parabolic top, that's your parabolic top. But if we think about where this parabolic top was, it was just around early January, and then here is where Elon Musk decided to, I suppose, pump the market, which is kind of where our price action is right now, which means that most people that bought on the back of Elon Musk's decision to buy are coming to break even right now and might be considering selling if it's not working out for them. They've watched their portfolio balance double, and now they've watched it come back to square one. The last thing they want to see is it go down in value, which it probably will. It probably will. And then I think what normally happens is in an event like that, this is what it kind of looks like over here. We see a lot of money just drop off. Just completely drop off. We see this in all kinds of charts. It gets to a point where people just cannot take it anymore, and then it just drops off to a low where it was almost an unimaginable low. I think we'll see some of that, where people they're still in profit now, or they're breaking even, or they've just started to lose money for the first time. And they think, right, well, this is it. I know, I've seen the charts, I know what's happened. I've seen some YouTube channels calling for bear market. I do not want to be in that. I cannot see my balance sustain temporary losses, which is obviously the way I see it. I cannot bear to see temporary losses, because obviously the long-term picture is that this is just one little blip on the, I mean, this isn't the best way to look at it, but it is just one little blip on a chart, really, if you look at it on the long term, which is the way Bitcoin really should be viewed upon long term. But short term is not looking pretty, I have to say. So we're doing a live stream tonight, like we do every Tuesdays. Patreon members only, but it's £7.50 a month. You have a look at all your altcoins and whatever it is you want me to look at, and questions you've got to fire at me. But I have to say, from the altcoins that I've been looking at recently, there is opportunity for bounces, and as opposed like today. And there could potentially be a really good bounce as a result of what's already happened today across the board. So tomorrow could be a phenomenal green day. But again, what we're looking to do here is not as safe as what it was like in January when we were buying all these altcoins at the absolute bottom. Now, really, all we are doing is it's like playing a game of football between the Bulls and the Bears. To you, to me, to you, to me. It's like that. And to be honest, the Bears obviously have the upper hand at the moment. They can throw the ball hardest, so you don't want to drop that ball, because overall, the last thing you want to do is get stuck in an altcoin. If we are approaching and do enter into a bear market, if you want to look back at history, you will see that the last place you want to be is in an altcoin in an actual bear market. But at the end of a bear market, could potentially be one of the best places you could be. Anyway, we'll talk about that strategy more on the live stream. And hope you have a nice day. Take it easy.